Hey there. Hope everybody's doing well. Jeremiah Conjure here from Annuity Association, and today we're going to be reviewing a fixed indexed annuity currently offered by Fidelity and Guarantee, or F&G Life. The product today is going to be the Prosperity Elite, and it is going to be an interesting annuity to dive into and break down, and I'm really excited to do this today because each of these indexed annuities is designed and created for a different intended purpose. So this one's going to have some fun features in it that I'm going to go and break down for you and be able to help you understand it more thoroughly to help you make an educated and informed decision on if this is an annuity you should consider for your retirement. So the premise of these reviews is to help bring transparency to the annuity buying process through education. So if you're looking at annuities, specifically fixed indexed annuities, you've come to the right place. Here we're going to take a deeper dive into the different features, benefits, and even rates to help you understand if this is an annuity that may help you meet your overall objectives in retirement. So before we get started, if you would like help and assistance comparing fixed indexed annuities or income annuities or any type of annuity for that matter, you can visit our website at annuityassociation.com. Right there on the main page, fill out the request form for your free report, and we'll get that out to you in a timely fashion. So before we get started in the review, I'm going to go ahead and start with our handy dandy disclaimer. So if you'll just bear with me, please, while I get this pulled up. Okay. So we are reviewing the F&G Prosperity Elite. There's three versions of this annuity, one with a 7-year surrender period or contract period, one with a 10-year, and another with a 14-year. This is a fixed indexed annuity independent review by Annuity Association. This is a review, not a recommendation to buy or sell an annuity. F&G has not endorsed this review in any way, nor do we receive any compensation for this review. This review is meant to be an independent review at the request of website visitors so they can see our perspective when breaking down the positives and negatives of this particular annuity. Before purchasing any investment products, be sure to do your own due diligence and consult a properly licensed professional should you have specific questions as they relate to your individual circumstances. All names, marks, and materials used for this review are property of their respective owners, not that of annuityassociation.com. While care has been made to ensure this review is complete and accurate, no guarantees are made to the completeness and accuracy. Okay, we've gotten that out of the way, so let's go ahead and dive in. So we're going to be taking a look at the Prosperity Elite 7 brochure. Now there is three variations of this product, all with different surrender periods or contract periods, again, 7, 10, and 14 years. But today we're going to be looking at the 7-year. So the Prosperity Elite 7 helps you maximize retirement income with guaranteed payments for life. It also helps preserve your savings with indexed growth potential and no downside market risk. And it can also be a great tool to leave a financial legacy with a death benefit for peace of mind. So if you're in the planning process of retirement, maybe you're approaching retirement, or you've recently retired, or maybe even been in retirement for quite a while, and you're looking for a safe growth money vehicle, something that will allow you to protect your principal, but earn a reasonable rate of return and do so in as riskless manner as possible, then a fixed indexed annuity is something you should really consider and take a look at. Let's face it, in today's low interest rate environment, the traditional safe money instruments that we used to use, such as bank CDs, money markets, your treasury bonds, you just can't find enough yield in those vehicles any longer. And so you're left with two options. You either just keep it in your savings account and earn nothing, or you put it in the equity market and buy stocks and take on the risk, or you consider the alternative. And in this case, the alternative is a fixed index annuity. You're going to get the benefit of principal protection where none of your money can be exposed to market losses, so you'll never go down in value due to market risk. And in addition, these insurance companies and the indexing strategies that are often provided in these indexed annuities are going to be very, very impactful in the regards to how much of a return you can earn with no risk. So Definitely a very cool investment savings vehicle for retirement, especially when it comes to preserving your nest egg. So for those not familiar with F&G, since 1959, they have been a silent, unseen enabler of the hopes and dreams of millions of Americans. Today, F&G provides annuities and life insurance for over 700,000 people across the United States. The people who hold their policies were introduced to them by someone they know and their financial or insurance professional. They collaborate with them to be partners in prosperity with you and the people they care about most. Working together, F&G and their clients become something greater. They become agents of possibility, agents of empowerment, agents of stability and security in a volatile world. We all work together, think together, succeed together, and we collaborate to help you prosper. So we're going to go into this portion here of just discussing high level of what an annuity is. It's a long-term retirement tool that can be a cornerstone of your financial security and success. You pay a premium, think of it as your principal, to F&G, and F&G provides an annuity contract with unique benefits to you. So again, each annuity and annuity type is created for a different intended purpose. Once we understand your needs and your goals and objectives, and the assets that we have available to fund those, then comes down to the planning process of deciding which type of annuity is right for you. And then of that type, which one's going to be the best for you to give you the highest economic benefit, whether it be lifetime income or safe accumulation of assets or legacy. Either way, an annuity protects and potentially builds your savings with the option of converting them into scheduled income payments for retirement. If you're scheduled in if you're interested in an opportunity to grow your savings based on a market index without the risk of actually participating in the market, a fixed indexed annuity may be a good choice for you. This reference guide is intended to provide a helpful overview of the Prosperity Elite 7. It is coupled with the Statement of Understanding that explains this annuity in detail. The Statement of Understanding contains product information that is important and specific to you to give you an understanding of this annuity. If you decide to complete an application, your financial or insurance professional will ask you to sign an acknowledgement to confirm you've received and read the Statement of Understanding. In the event of any conflict between this guide and the Statement of Understanding prevails. Your financial insurance professional is able to explain the benefits and restrictions that apply in your state. Read on and learn more. So if you're interested in finding more about this after watching this review, and maybe you're interested in comparing this Prosperity Elite to an annuity that you already own or that you're thinking about buying, and you want to really compare apples to apples, that's where we come in, and our value add to prospective clients is to help you compare apples to apples to help you make the best decision for your future. Again, annuityassociation.com. You can fill out the request form there for a free report, and we can get started down that path. So the Prosperity Elite 7 protects your savings from market risk while potentially giving you market-based growth with tax-deferred earnings. It is a long-term retirement planning product with these important features. So in the Prosperity Elite, all three versions are going to offer you a bonus, a premium bonus to your account that vests over the surrender charge period. In this case, it's 7 years. If you got the 10 or 14 year, it'd be fully vested at the end of those periods of time. You can choose from several options for earning interest on your premium, one being the fixed interest option with a guaranteed rate, and additional options tied to market indexes. Any growth of your savings is tax deferred, which is a really important perk that is often overlooked inside of annuities. All of your growth is tax deferred, and you may pay taxes only when you make withdrawals or receive income in the future. You have the option of guaranteed income for life. You'll have full access to your account for unexpected healthcare costs, namely qualifying nursing or home healthcare, or in the event of terminal illness, this benefit applies to conditions that arise 1 year or more after the contract begins. From day one, you have death benefits for peace of mind, and you may withdraw your money at any time. Withdrawals in year 1 or withdrawals in year 2 to 7 are over 10% of your vested account value will incur withdrawal charges. So inside the Prosperity Elite, there is a free withdrawal provision during the surrender period. It is up to 10% per year with no penalty. But in the event you need some more liquidity or additional liquidity above and beyond 10%, any dollars above 10% would be charged that withdrawal charge, which we'll be taking a look at momentarily at that schedule. So let's talk about the growth potential. So the premium you pay in the first year grows with a vesting bonus. F&G adds a percentage of this vesting bonus to your account each year for 7 years. You may add more premium later if you like, increasing the amount of premium that may grow over time. So this particular product offers a bonus. We'll be diving into the bonus amounts momentarily, so stick with us in this review. We'll be diving into the 7, 10, and 14-year Prosperity Elite to determine how much bonus you get. And in addition to that, we'll be looking at the index growth strategies to help you understand those a little bit more in detail, to see how they've performed over the last 10, 15, and 20 years, when we'll backtest those to show you that performance. Your choice for tax-deferred growth, you choose any combination of these potential interest earning options. So you've got the fixed interest option that's guaranteed never to be below 1%. That annual rate is set every year. So each anniversary year, you'll have that declared fixed interest option established. And then inside the indexed portion, or the index growth strategies, we're going to have a few different indexes that are going to give you the opportunity to grow based on the performance of the individual index. So we have the Barclays Trailblazer Sectors 5. We have the traditional S&P 500 index, and then we have the Gold Commodity Index. Each index option is subject to caps, participation rates, and/or spreads. We'll be diving into those specifically in just a moment. And the index options are linked to a market index, but you are not invested directly in the stock market or any index. We protect you from the downside, and you are guaranteed not to lose money due to market declines. At the end of each crediting period, any gains are locked in. So the reason people buy annuities is because of the contractual guarantees. In this case, on this type of fixed indexed annuity, the guarantee that you receive is a guarantee of principal protection, and you'll never lose money due to market volatility or market losses. In addition, any gains that are incurred during your crediting periods are locked in and are never exposed to any market volatility as well. So you're safe and sound there when you do receive those gains. The availability of the index options vary from state to state, so please check with us at annuityassociation.com. You choose one of two package alternatives. So here's where it really gets interesting, and I really have become a fan of this annuity recently, helping an older client who's he's actually in his 80s, and he was looking for a vehicle that would protect his principal, give him upside with a reasonable rate of return. And this product was one of the ones during my research on one that might be suitable for him. So let me break these packages down. They're pretty unique in the way that they're offered. So first, you have the enhancement package. This guarantees you a lump sum death benefit, a bonus of 2% for ages 0 through 70, and 1.25% for ages 71 and above that vest over 7 years. The fees calculated as 0.6% of the highest guaranteed death benefit amount on each contract anniversary. So to get the enhancement package, there is a fee of 0.6% or 60 basis points or 0.6%. And the other option is the protection package. This guarantees a lump sum death benefit or death benefit payments over time, the bonus of 4% for ages 0 through 70 and 3% for ages 71 and above that vest over 7 years. Guaranteed income payments for life that increase if you are impaired within the meaning of the contract, and fees are calculated as 0.9% or 90 basis points of the income base plus the 60 basis points of the highest guaranteed death benefit on each contract anniversary. So a total of 1.5% for the protection package. Still, when you consider 1.5% versus having your money managed at a brokerage house, their fees are also going to be anywhere from 1 to 2% depending on the total of money being managed. So still very, very reasonable fee there for those extra benefits. So key benefits here: guaranteed income under the protection package. If you have selected the protection package, you may receive scheduled income for life as guaranteed withdrawal payments. If you haven't made excess withdrawals in any year, payments will never run out, no matter how long you live, even if your account value is depleted. You may begin guaranteed withdrawal payments anytime after the first contract year, if you are at least 50 years old. The time to start is up to you, and you may stop income payments and restart them later. The payment amount is determined by the income base of your account at the time you begin withdrawal payments. The income base is different from your account value and cannot be surrendered or withdrawn. Your guaranteed withdrawal payments may increase if you become impaired to the extent you are unable to perform at least 2 out of the 6 activities of daily living. These are defined terms and may vary from state to state. Increased payments will continue until your account value is depleted or the impairment no longer qualifies you for the benefit. Payments then revert to the original guaranteed income payment. Prior withdrawals reduce guaranteed income amounts. So if you're withdrawing above and beyond the guaranteed income amounts, it's going to affect how much those guaranteed income amounts are moving forward. So whenever you're looking at annuities, especially with guaranteed lifetime income, you're going to want to make sure that you're leaving enough liquidity in the rest of the estate outside of the annuity to serve for those, unexpected events or rainy day events is what I call them. That way you never have to touch anything above and beyond the guaranteed withdrawal payment amount, and you can keep that income payment whole with no adjustments moving forward. Death benefits. Okay, so the enhancement package death benefit is always paid as a lump sum, while the protection package offers either a lump sum or payments over time. Again, prior withdrawals reduce the death benefit amounts. And peace of mind. So at the end of the day, when we're looking at these types of products, we want to make sure that they're helping us accomplish our objectives and goals, but also, most importantly, allowing us to have more peace of mind. And so there are some unique features built in here that will allow you to have more peace of mind when deciding to move forward with this annuity. So first is access for unexpected healthcare cost. If you need home health or nursing home care, or in the event of terminal illness, you may access your account value with no surrender charges or market value adjustments. The diagnosis of terminal illness or the beginning of home health or nursing home care must occur at least 1 year after the contract is issued. These are defined conditions, and this benefit may vary from state to state. The ability to withdraw is another peace of mind benefit. It is the ability to withdraw your money at any time. We know, and F&G knows, you may have unexpected opportunities or expenses in the future. You'll have penalty-free access to 10% of the vested account value in years 2 through 7. So anytime after the first contract year, starting years 2 and beyond, you can access up to 10% per year with no penalty. The surrender charge in contract year 1 is 10% of the withdrawal, and this percentage decreases over 7 years. So we're going to look at that withdrawal or surrender schedule, here momentarily. It does vary from state to state, so be sure to check with one of us here at Annuity Association to get the detailed version of your Prosperity Elite in your given state. And in addition, if it comes down to being qualified money or tax deferred or tax preferential treated money that may be in a 401k or a retirement account such as an IRA, if you roll that money into this type of annuity, F&G will allow that and help with the required minimum distribution schedule to help you meet your RMD requirements when you turn age 72. So for those not familiar with an RMD is a required minimum distribution. It's the amount that qualified plan participants must begin withdrawing at age 72. So RMDs are required in order to avoid a penalty from the IRS and will be taxed as regular income. If you need to withdraw above the annual penalty-free withdrawal amount for the purpose of an RMD, F&G will waive any surrender charges and market value adjustments. So what's a market value adjustment? That's any time a withdrawal incurs a surrender charge, a market value adjustment will be made. The market value adjustment is based on a formula that takes into the account changes in the rate since the contract was issued. Generally, if rates have risen, interest rates specifically, the market value adjustment will decrease the surrender value. If they have fallen, the market value adjustment will increase the surrender value. The market value adjustment does not apply in Illinois and Missouri. And then annuitization is not having to worry about outliving your assets. You have the ability or the option of annuitizing your contract, which means turning your annuity into scheduled payments for life. If you keep your contract until its maturity date, you must annuitize it then. The maturity date of the Prosperity Elite contract is set when the contract is issued. So annuitization is completely different than lifetime income using the lifetime income rider. Annuitization means you did not elect for the rider, or maybe you did, but you decided not to turn it on, and instead you decide to annuitize the contract. What they do is they'll take a look at the accumulated value at that time and then give you the amount of income it would be on an annual basis for the rest of your life. When you annuitize, you give up control of your principal and any interest at that point. Very rarely do people annuitize their contract. Only the last stat I saw was only like 4 or 5% of all these types of annuities actually go through the annuitization process. The rest, if looking at lifetime income, the lifetime income rider is usually the option chosen for that. And the reason being is when you take the lifetime income rider, you're not giving up control of the accumulation value. You still can take penalty-free withdrawals if needed, and you maintain that principal over a longer period of time where you still can have choices and options and flexibility there. So just keep that in mind. You do not have to annuitize it, but they do give you the option if you decide to. I will tell you this, annuitization would probably 9 times out of 10 give you a higher lifetime income amount than the lifetime income rider would. And it's just because of the fact that you're giving up control over the asset. So tax information, the annuity is tax deferred, which means you don't pay taxes on the interest as it's earned, only when you withdraw it. Tax deferral may not be available if the annuity owner is an entity such as a business. Withdrawals are treated as coming from earnings first, taxable, and then as a return of your premium. If you withdraw money before 59.5, you may also pay a 10% penalty to the IRS. Please keep in mind that buying an annuity in an IRA or other tax-qualified retirement account offers no additional tax benefit since the retirement account is already tax deferred. If your annuity contract is within a tax-qualified plan, you may be required to take minimum distributions beginning at age 72. You may exchange one tax-deferred annuity for another without paying tax on the earnings when you make the exchange. Before you do, compare the benefits, features, and cost of the two annuities. You may pay a surrender charge on the annuity you are exchanging, and you may start a new surrender charge period with the annuity. F&G does not offer tax or legal advice, so make sure to consult with a tax professional regarding your specific situation. So that concludes the review of the brochure. So let's go ahead and dive into our software now, and we're going to go ahead and pull up the Prosperity Elite 7. And first thing we're going to do is take a look at the bonus offerings. So on the Prosperity Elite 7 enhancement package, you would receive a 2% bonus, as shown here in the highlighted version of the info here. 2% premium bonus in green. And on the protection package, there's a 4% premium bonus. Now, I believe that bonus does go down if you're over the age of, I believe it was 75. But just for anyone below that age, 2% on the enhancement, 4% on the protection package. And then on the Prosperity Elite 10, on the protection package, it's 6% bonus. And on the 14 enhancement, it is 4%. And on the Prosperity Elite 14 protection, it's 7%. And then lastly, the Prosperity 10 enhancement's 3%. Okay? So the longer you commit, the longer you put your money in, the more bonus you're going to get. That's the rule of thumb here. All right, next we're going to take a look at let's take a look at a quick detailed look at the index allocation options to help us understand which ones are going to give us the highest opportunity for growth. Since this is an accumulation focused annuity with the option for lifetime income, we want to know, how is this going to do, what index is going to give us the highest opportunity for growth? And the way that we're able to do that, and it's one of the value adds here working with us at Annuity Association, is that we're going to take you through an education process that's going to take a look in depth at the back-tested performance to show us if we were invested in this annuity over the last 10 and 15 and sometimes up to 20 years, over the last 10, 15, and 20 years, how would that annuity product have performed, and which index strategy in the annuity would have provided us the highest economic benefit. And so right now I have our software sorting for the Prosperity Elite results. And you'll see the Prosperity Elite 7 comes up as the first option. And this is the 2-year point-to-point strategy using the Barclays Sector 5 index, which is a very strong performing index. Momentarily, we'll be taking a look at the historical performance of just the index itself. So stick with us. But what we find here is that over the last 10 years, from December 31st of 2010 to December 31st of 2020, the average annual compounded rate was 7.28% over that 10-year period. 7.28% average annual credited interest is what you would have had if you own this annuity during the last 10 years. Now, what's interesting is if you look below that number, you'll see the green number here, 9.03%. This is looking at the best 10-year period over the last 20 years. And that happens to be February 14th of 2010 to February 14th of 2020. The software is telling us if you held it then, if you bought your annuity then, and that was your anniversary date, you would have had a 9.03% average rate of return compounded over that 10-year period. In addition, on the right-hand side, you'll notice the red numbers. That's showing us the same data, but in this case, it's the worst 10-year period over the last 20 years. And that's from September 9th of 2005 to September 9th of 2015. The performance was 5.37% average annual credited interest. So I think that is a very important data set to really take a deeper dive into. And the reason being is that, going through 2007 and 2008, which was the Great Recession or the global financial crisis, however you want to refer to it as. But, if you were directly invested in the S&P 500, for example, investors lost up to 38.49% if they were fully vested in the S&P. And coming out of that period of time from 2000 to 2010, that was known as the lost decade, where there were no gains experienced for the most part in the marketplace. And you're coming through a very dark period of time, 2007 and 2008, in this 10-year period that we're showing. And to know that you still had an opportunity to earn 5.37% on average per year, without any loss because of the protections offered of the annuity, that really tells us a strong story. So I always like to spend some time here, because my philosophy is if you're considering buying a fixed indexed annuity for growth, for accumulation, don't buy it with the best illustrated numbers. Buy it based on the worst illustrated numbers. Buy it knowing that through a very difficult economic period of time, it still performed at a reasonable rate of return. And if you can sleep with that number, in this case, 5.37%, along with the idea that you have zero downside risk and principal protection, if that number is suitable for you and reasonable, then maybe you should consider it. But if not, then don't. Okay. These fixed index annuities are not created to outperform the stock market, but they are created to provide a reasonable rate of return somewhere between stocks and bonds and provide you something along the middle of those two. And in this case, bonds being at historical low rates, an FIA is a very suitable alternative to consider. Okay, and then over the last 15 years, which is roughly the same point of time, December 31st of 05 to December 31st of 2020, the average rate of return was 6.02% on an annual basis. So how those numbers are being derived is taking the Barclays Trailblazer Sectors 5 performance and then combining the participation rate. So in this case, this strategy is using a participation rate. And a participation rate defines of the index performance, how much do you as the investor get to participate in? So in this case, it's above and beyond the 100% mark, which is very good. To give you an example, if that Trailblazer Sectors 5 index had a 10% performance or 10% growth, your contract would be credited 12.5%. So 2.5% above the 10%. So that's how this is all coming together and giving us those numbers. All right. So in addition to that, we see the rest of the Prosperity Elite versions here, the 10 and 14, along with that same index strategy. Now, one key thing to point out here is that all of them are going to offer the same index strategies, but they may offer different participation rates. Part of that reason is because, if you're getting the protection versus the enhancement package, as well as the 10 and 14-year versions are offering a significantly higher bonus. So what they're doing is dropping the participation rate down just slightly. So if you notice, the 7-year version's 125% participation, but the 14 years 120%. And same with the 10-year, 120%. So I always say don't get caught up in the bonus, because usually when there's a bonus offered, they're pulling from other areas of the contract to make up for those dollars they're giving up front. In this case, that's an example right here that they're pulling 5% of the participation off of the contract for the higher bonus versions. Okay, we got a few more minutes left. Let's go ahead and take a look at the surrender schedule real quick. So we'll look at the 7-year surrender schedule. In most states, it starts at 10%, then goes down by 1 percentage point each year thereafter. But because insurance and annuities are individually governed by their state body of insurance commissioners, they do have different surrender periods, sometimes for different states based on your age, based on your state. So, for example, in Florida, it's 9% starting out instead of 10 for ages 65 through 70, 71 and up. So just keep that in mind. And then the last thing we'll do is take a quick look at the illustration. So I think it's helpful to dive in to the illustrations to help you understand the logistics. So bear with me. I'm going to go ahead and pull that up. And we'll take a look at male age 60 in the state of Florida, non-qualified money, $100,000 investment. And what our software does, again, is we're able to tell, based on back testing performance, which index which index strategy would give us the highest economic opportunity for growth. And in this case, it's the 2-year point-to-point Barclays Trailblazer Sectors 5. So I'm going to go ahead and generate that, and we'll take a look and see how it unfolds. Okay, so here is the most recent 10-year performance. It's taking a look at all of the parameters of today's offering with the participation rates and index strategies offered, and then back testing them the last 10 years to tell us how they would have performed. And so you'll see, with it being a 2-year point-to-point strategy, the first year there's a 0% interest rate. That's because with a 2-year crediting method, you will not incur the interest that has been earned until the end or the anniversary date of that second year. Okay, so first year 0%, and then you see the second contract year at the end, it's getting a credit of 21.88%. And then the interest is going $22,755 is then going over to the accumulation value. You'll notice in the accumulation value starting year one, they're putting in the 4% bonus into the accumulation value. So when you get the actual illustration from the carrier, it'll have one column that'll say accumulation value and then the other one vested accumulation value. And they'll be different because you're not fully vested with your bonus until the end of the 7-year contract on the 7-year version. Again, year 3, you see 0% interest credit. And then contract year 4, 29.5%, equating to $37,393, crediting over to the accumulation value, making it a total of $164,148. You'll see contract year 5, 0%, then year 6, 2.01%. So obviously that was more of a challenging year for the index and the markets overall. And so not much interest was credited there, but you were not given a 0. So that's a great thing. So that pattern will continue over that 10-year or 7, 10, or 14-year period. And key things to note here is your death benefit column on the far right-hand side will always equal the accumulation value, regardless if you're in the surrender period or not. If you pass away, your beneficiaries will get the entire accumulation value as the death benefit with no penalties incurred. So one of the stereotypes or negative connotations with annuities is that if you die, the insurance company keeps your money. That is 100% entirely false. In most annuities, your beneficiaries will receive the entire value of the accumulation account. The only type of annuity that the insurance keeps your money is what's called a single premium immediate annuity structured with life only. It's an income annuity with life only, meaning if you die, payments stop and the accumulation value is gone. And this type of annuity, if you died, your loved ones would get all of the accumulation value with no penalties. The insurance company does not keep a dime of your money. Okay, moving down on the illustration, it'll show us again the most recent 10-year period and the average annual credited rate, 7.28%. The highest 10-year period was 9.03%, and the lowest 10-year period was 5.37%. Now, here's what's interesting. On the low period, over here in orange, you'll see the first, handful of years. What is that? 4, 5 years, there's 0%. In the fixed indexed annuity world, we have a saying that says the 0 is your hero. And it's because it's reflecting that the markets were not performing at that time and maybe even dropping negative. But because of the protections of the principal in the annuity, you would have just been credited a 0 if there was negative performance. So you'll see going through September of 06, 07, 08, 09, and 2010, that was the year of the global financial crisis. That 5-year period was attributed mostly from the drops in the market due to the global financial crisis. And so while many other people were losing their nest egg because they stayed in the market, you would have been shielded from all of those losses and just been credited a 0 for those down years. Very, very important to note. This shows an example of those 3 10-year periods on the chart. You'll see that orange line is the low period. It's just flat for the first 5 years, and then it starts to climb. And then the others there obviously had better growth because of the better periods of time. Okay, one last thing, and we'll wrap up here, is going to take a look at the actual index itself to see, what has this Barclays Trailblazer Sectors 5 index actually done. So we have the ability to go in and sort and filter all of the available indexes found in these indexed annuities, and we can actually see how they've performed and really make an educated decision on what we can anticipate or expect maybe moving forward. So because of us being in January, obviously, we're only 3 weeks into the year. Year to date, we're showing down 1.04%. Last year, 55 basis points So it did not have a big year of growth in 2020 due to the volatility, but it still was positive at the end of the year. And then if you look at 2019, 14.78%. The last 1 year return is 1.88%. And then the last 5 years, 5.22%. The last 10 years, 5.79. And since inception, 4.64. So again, these indexes are not designed to outperform the stock market. What they are made to do is to earn, a reasonable rate of return in very, difficult times in the market, as well as the upside of the market. So you can actually make an average rate of return that's reasonable over a longer period of time, instead of having negative performance and having to wait until you break even to even have any type of gain in your account. So a lot of these indexes, and this one in particular, are what we call a multi-asset risk controlled index. They have algorithmic based learning and machine trading that's dynamic and trading and rebalancing the allocations on a day-to-day basis, and some of them up to the hour. And why that's important is because when you're, looking at hedging volatility with the intention of trying to earn, rate of return even in volatile periods, the key there is diversification. So these annuities and these proprietary indexes are designed to provide dynamic hedging ability to shift the assets from one asset class to the next asset class that's uncorrelated to still make interest in a volatile period. So for example, in this particular index, the 5 stands for a 5% volatility trigger. If the equities portion of the index is experiencing a level of 5% or more of volatility, meaning it's dropping 5% or more, then the index will automatically shift all of the holdings from the equities and shift them to an uncorrelated asset class, usually something along the lines of a bond index or commodities index, or some or even have a gold index. And they'll do that to shift and hedge that volatility to still provide the investor upside. So you're getting world-class access to world-class investment money managers and algorithmic-based learning trading systems to help you, perform and earn a reasonable rate of return even in difficult markets. So they perform well during really good markets, and they perform well in really volatile, choppy markets. And that's the design, and that's the intention. So if you'd like more information, you'd like to learn more about the Prosperity Elite 7, 10, or 14-year version, or maybe you're interested in comparing this annuity to another one on the market that you're thinking about buying, you can visit our website at annuityassociation.com. Fill out the request form there for your free report, and we'll get in contact with you and get you on the right path to your next annuity. So thank you so much for tuning in. Hope that you've gotten some value from this review today. If you have a chance and you're interested in learning more about the other annuities on the market, you can visit our YouTube channel or right here on Facebook, wherever you're watching this video today. And we have our annuity review database where you can dive in and watch the videos of the various annuity reviews that we've done to compare and determine which one might be right for you. So enjoy doing that. Hope you get some benefit out of it. And we thank you so much for tuning in. We'll see you next time. Take care of one another. This is Jeremiah Conger from Annuity Association, signing off.